Hey there, friendos. This is Sandeep here, and today we're going to talk about a company which has been everywhere. It almost seems like this is the stock to rule them all, but let's get started. Welcome back, friendos. First of all, why am I wearing a leather jacket? Why am I wearing green? And what are we talking about today? The reason for this is we're talking about a company all of us have heard of, even if people have no interest in anything stock related, know what's going on with NVIDIA, NVDA. And the CEO of NVIDIA, Mr. Jensen Huang, he always comes in wearing one of these really fancy leather jackets. So I had to pay homage to our friend Jensen. Although this is faux leather, he has much more expensive, fancy leathers, but this is the best we could do. And the green color, NVIDIA's colors. A lot of us have stories with NVIDIA. We probably grew up with them. I have this really old NVIDIA card. I have some that are even older, which I don't even know why I'm keeping these, but it's fun little memories. And look at the size of this card. We're going to get into something very interesting very soon when it terms to size and how much things weigh. First of all, NVIDIA reported earnings just this past week. And I'm going to be honest with all of you ShareTreck friendos. I went into this earnings call with a bias, and I recognize that, however. And I was looking at the NVIDIA earnings almost like a reason to be bearish. And I wanted a reason. I was looking for a reason to sell my NVIDIA shares. And did I find it? Maybe, but we'll get into that. First of all, the story of NVIDIA is multiples. And is this company trading at a very high multiple, very high PE ratio, very high PG ratio? Yeah, it is. I'm not gonna sugarcoat it. The company is trading very expensively. But what's the reason for that? And what's going on in the future in NVIDIA? So first of all, in the case of historic PE and the PE and the EV to EBITDA, first of all, if we're talking about the PE to EBITDA, lower is usually better in these metrics because it means that you're getting a better deal on the earnings. Think of it kind of like you'd rather pay $20 for your favorite shirt than paying $30 for your favorite shirt. There are two ways to raise or lower your multiples on your PE or your EV to EBITDA and make it much more favorable. The first way is a stock to sell down, and the second way is a stock to earn much more earnings, increase their revenue, increase their earnings, make much more money. And NVIDIA has been using the second route to make its stock much more favorable, as we've seen in the appreciation of the stock price. So the company, although it's got a very high, very rich PE, and the EV to EBITDA is actually trading lower than the historic average by 14 to 17% because the company has just increased its earnings and its revenue by such an immense margin, such an immense amount. Amazing how we could do that. Talking about their earnings that just came out, I, as I said, had a bias, but I had a feeling. I expected NVIDIA to beat earnings because they beat earnings 90 out of 100 times. Most of the times, 9 out of 10 times, they're beating their earnings. Though what surprised me was that their guidance was actually really good. NVIDIA beat on revenue. Their expected revenue about 20 billion. They beat and got 22 billion. And this is the crazy part. They're guiding 24 billion in the next quarter in Q1 2024, the current year, which means despite the increase in share price, there's still growth. The revenue is still expected to rise, which is surprising to me. This is showing a 9% growth quarter over quarter. And to me, this shows that the peak is just not in yet. NVIDIA, and this is another crazy metric I read an analyst just give out a fun little metric. NVIDIA generates more in one day than companies like Square or Block do in the entire calendar year. And Square just reported on Friday and are up almost 20%. NVIDIA more in one day than that entire company. Wow, revenue machine. And now it's a $2 trillion company. Though, here's the thing that we would like to get into. First of all, talking about their revenue, NVIDIA being the marketing machine that it does, on their website, they have put out how much their revenue is growing each and every quarter. You can see over here all of their metrics. Every single quarter, you see a wee bit of a slight jump. You can project even further. Pardon me, this is the prior one. You could project even further and see over here in 2024, significant jumps expected. Excuse me. Further on, their data center revenue expected to rise over here 2024, which is something else, how we can continue to do that. But good on their marketing side. So why are we showing this? The rate of growth. So similar to inflation and deflation, one thing I found out and discovered in their earnings is the rate of growth for NVIDIA for the last, I'd say almost 9 months, 3 quarters, has just been insane. Where they will grow, just as an example, they grow 10%, then 15%, then 25%, and then 30%, 34%. Where we had normally a 34% the prior quarter, now we're seeing a 19% growth. There's still growth. It's still growing. It's still going from 100 to 150. But the rate, the pace is starting to slow down. Still a lot of growth, but the ramp is starting to kind of narrow out, where instead of doing this, it's doing this. Pardon me about that. So getting into the earnings call, I listened to the entire 2-hour earnings call and I learned so much. And I'm going to give you the summary. One thing that is quite interesting about NVIDIA is higher interest rates despite everything. And we mentioned this on a video Raj and I did where we were discussing NVIDIA and discussing this titan of a stock. Interest rates don't seem to hurt NVIDIA. Instead, they help NVIDIA because NVIDIA seems like it's a better alternative to other companies which are much more interest rate sensitive. Companies like the auto sector. I'm thinking of things like Tesla. They aren't as favorable because during high interest rates, these companies lose money and don't make as much revenue. Whereas NVIDIA, interest rate doesn't matter to these. So it's seen as much more appealing during a high interest rate segment because it's still able to generate revenue. Now, NVIDIA, the word of this whole earnings call and NVIDIA as a whole has been AI. And as a listener to this over 2 hours, I heard AI well over 100 times. I wish I marked down and did a tally marks of how many times I heard AI because it was insane. Excuse me. NVIDIA speaking about the AI integration, they're saying they are seeing this integration themselves into the sectors of finance, automotive, healthcare. Raj actually did a nice video on how there's a genomics companies integrating AI like NVIDIA into their work. Excuse me. So more so on earnings, the thing that they started off with is Hopper production, and Hopper is some of their chips, and is also a part of their H100 chips. The company says that the supply is still constrained, and the demand for these H100 chips, the demand for Hopper and other GPUs outweighs the supply. Interesting fact, by the way, NVIDIA's Hopper GPU, their H100, it has over 35,000 parts and weighs about 75 pounds, mainly used for enterprise. So this old card, this isn't the thing. These new ones are massive. 40% growth in data center revenue, which they say was driven by AI, which means that 60% of their data center is still the old way, but it's increasing. So AI is showing that it's going on. Their biggest clients, by the way, they say are biotech, language learning models, and company specific. Microsoft, Google, Meta, they all run GPUs. And the biggest growth adoption, they say, is actually been through financial, especially in the field of fraud detection, also in robotics and automotive, and big into healthcare. But they see the biggest point in financial. Now, on the topic of healthcare, because this is originally a genomics channel, and we are, although we ventured off into many, many different things, providing more content to you, genomics factor, this was so appealing to me. They have this new little model, this new AI data center model called BioNeMo. And basically what BioNeMo does is at a short glance, it makes pre-trained AI models for drug discovery. That is amazing, especially for something related to genomics, where drug discovery is one of the main hurdles for drug discovery and approval, of course, main hurdles in the entire biogenomics sector, the entire pharma sector. And AI can now help overcome one of those major hurdles. That was so cool for me to hear. So this is something which we got to keep our eye on as genomics investors, these BioNeMo AI models. On the topic of financials, they say are incorporating AI into their training, which is cool, but also in their fraud prevention. Actually, Jensen Huang, he mentioned that American Express, which is using NVIDIA GPUs, was able to decrease or improve their fraud detection by over 6% using NVIDIA AI. And they expect this to grow even further. Talking about the financials, they say AI is being integrated into trading by many of the major Wall Street banking sectors. They didn't name any names, but I'm guessing like your Morgan Stanleys and your JP Morgan Chases and so on. InfiniBand is NVIDIA's way of networking. They're seeing growth in this, but they are also rolling something called Spectrum AI, Spectrum X, which uses Ethernet. And that's something which the company AMD and Broadcom were partnering on, making Ethernet going. NVIDIA says, nah, just use ours, use Spectrum. So they're using InfiniBand for the new networking and also the Ethernet networking using Spectrum. They got their hands in everything. But one thing that was kind of negative was the topic of China. They're saying not much improvement out of China. Conversely, America improving hugely. Now, back to numbers and innovation. We've spoken a lot on the channel about the H100 chips, how these chips are able to get a 900% margin. What was really uplifting, very positive for me to hear, was the H200s, which is the next generation, which I'm guessing the pre-orders of these things are already way out there, are expected to ship as early as Q2 2024, which is just in a few months. H100s coming out. And then they mentioned something called B100 chips. I haven't read too much into this, but okay. Servers up 5x, especially on their InfiniBand. And we were just talking about the BioNeMo. NVIDIA, the innovative company it is, they're also rolling something out called Thor or Drive Thor, which is cool. It's coming out next year in 2025, and it's their way of developing self-driving. And they said a lot of the Chinese manufacturers are early into getting these. They named Li Auto. They didn't name Tesla, but Tesla is doing their own thing with AI and self-driving. But this might be a way that NVIDIA competes with Tesla on self-driving chips. Way to go. They also mentioned making AI factories. Yes, factories, which I my apologies. I didn't fully understand what they meant by this, but I think they're talking about the cloud service providers making cloud factories. I doubt there's a factory making AI, but all right. So talking about where's the growth left? And this is the main part. This is what I feel most of us came here to hear. Where does NVIDIA continue to grow? I think I have the answer, and that is looking at the fundamentals, looking at what I've heard from the CEO and the management team, and looking at the numbers, conditions look positive. Continue growth throughout 2024 and even into 2025. However, I'm not sure what happens beyond 2025 as things like competitors jump in and supply meets demand. Demand, as what I've heard from them, what I've heard from NVIDIA, continues to improve as NVIDIA is currently the number one, kind of like how Tesla is the number one in their field. Despite economic conditions, they're still the top provider. NVIDIA is using AI to improve even unnecessary expenses, considering how restrained the supply they claim is. They're using AI to improve themselves. So NVIDIA realizes that people can't really afford these $100,000 GPUs, and they also can't get it because of the demand. So they say, hey, why don't you go work with some of our cloud service provider partners? They went ahead and named companies like Google, Meta, Microsoft, and say, go and work with them. But one thing that they are going to start doing is they're going to start leasing their GPUs starting at $4,500 a year. Yeah. So that's another way they could start generating revenue. But talking about revenue, one thing that got me really thinking about the future in NVIDIA is margins are expected to be mid-70s for the rest of 2024. However, the company says they expect the peak of gross profit margin to be 76.5 and to be around now in Q1, maybe Q2. Thereafter, because they're talking about peak, the margins are either going to stagnate or start to slowly go down. And that's something to really, really, really think about, especially as a shareholder. They're talking about lower lead times, which is, I didn't get into too much of that because that was very confusing. And I need Jensen Huang on the phone to explain what he meant by lower lead times and purchase commitments. So, hey, and I also got to ask him where he buys these cool leather jackets. Now we're going to go into what I think is the risks associated. First of all, the risk of balance sheet risk is very low. It is nothing because they have enough cash on their balance sheet to cover all their short-term expenses and even most of their long-term liabilities, which is great. The company is a revenue monster where the revenue, if we're talking about margins, as we see that margin peak right around here, around now, they say, not going to increase that much. And their net margin is, again, it's going to start kind of stagnating if we could see what's going on over here. Their multiples, and we start off the video talking about how it's making so much more money. And that's why, compared to the historic average, it's actually doing kind of better. And their forward multiples of their PE actually looks much more favorable. Their segment revenue, this is a lot to consider, and I'm just going to put it here in case anyone wants to go through it, but I've covered this through the summary. One thing I am going to really point out here is the sustainable growth rate for the end of the year. If they were to utilize all of their resources, they can grow and almost double going into the end of the year, which is amazing how the company can be so efficient and so dynamic. Now, if we're talking about the final part of this NVIDIA conclusion is, can I recommend this stock considering the current levels and considering where its revenue is and how its earnings and margins are growing. And I'm going to be very, very honest. It's a little hard for me to recommend a company that has appreciated over 100% in a year. First of all, there are no more catalysts left. So unless NVIDIA announces a stock split, there is not really anything else to be looking forward to until the next earnings. And the company is also trading at a lot of euphoria and a lot of FOMO. NVIDIA adding nearly $1.5 billion market cap in the last calendar year. And we hear at peer companies, which like Intel, which announced that they're getting another $10 billion in cash injection, and it trades downwards to sideways. So it's just odd thinking other things in the peer group. Also, another consideration is not everything is going to need to rebuild AI. And AI, we don't really need the new chips always. We don't really need the integrated things always going in. Things like data storage, especially. They can build AI and leave it running. But however, there is a lot of growth. There's a lot of positivity, especially in generative AI. Big drivers in financials, doctors, drug makers. And these are areas that we're going to need to pay attention to. Now, did NVIDIA peak? Did NVIDIA already reach the top? And according to the earnings, the peak is roughly around 2024 until the rest of the year. And margins are expected to normalize around the mid-70s. The gross margins, by the way, where it is right now. So after the increase, it's expected to normalize and either expected to stay that way or go slightly down. But the growth rate will slow, though, considering the supply is finally catching up to demand in 2025, that's when I kind of expect that the AI train and the AI margin expansion is expected to grow around 2025 when they think that supply will meet demand and they can't charge these exorbitant prices. So did it peak? Maybe around now, but I don't expect a decline until 2025 when the demand meets the supply. And Jensen, he being the amazing salesperson he is, did talk about how we're looking at the next industrial revolution, talking specifically in the areas of biotech, cloud, and automotive, AI driving this next industrial revolution. And NVIDIA, they're building the AI models for these companies and selling to them, which is huge. Though there are so many risks. And one of these risks are that I found that there is a lot of insider selling going on, actually. Over here, one of the directors sold 65,000 shares. One of the other directors sold quite a bit of shares, but this person who owns 500,000 shares sold quite a bit. And this person was one of the big institutional investors. Another person sold quite a bit more. So there is insider selling. And that's probably a lot of people profit taking. Their positions are huge. Though there is another risk, and this is just me speculating, as I was hearing so much of the NVIDIA putting their finger into everything. They're going to Spectrum. They're going into the normal networking, including the Broadcom way of Ethernet networking. They're going into automotive, into gaming, into even biotech. One thing to consider that eventually the Trade Commission and the Competition Commission might consider and think NVIDIA is a monopoly, especially on the AI field. And they might ask it to split up. There was companies like Johnson & Johnson, which got asked and forced to split up or forced to do something about that. And Meta has had some issues with the Competition Commission, including Apple as well, which was a big headwind for the stock. So should we start considering trimming? And I think it might be a good idea, although I don't see demand falling into 2025, as I said. And although margins have peaked around now or the next quarter, the demand is going to stay the same until 2025. So I kind of see NVIDIA maybe either going sideways or so until 2025. I could be wrong. I've been wrong a lot of times in the past, and I welcome being wrong because I learned something from it. But I consider trimming a little bit until at least 2025 when it could start seeing a big drop. I think likely that there are opportunities though, especially in this model space. And I consider some of the companies is working with, how it's able to use this Thor self-driving software, how it's able to use this BioNemo software, and so on. Although there is chip demand deflation happening in 2025 is what my expectation is. And the drivers are slower growth, which we talked about, increased supply, they're saying supply meeting demand, but also competition. Chip design competitors everyone's trying to build the next H100. AMD's working on it. Sam Altman, who is the co-creator of OpenAI, he's making his own chip making company. So there's competition with everybody. And this is the interesting thing. NVIDIA is trying to compete with everyone and also trying to be friends with everyone. In some ways, it reminds me of me. So really, really cool. And Jensen, by the way, great man, making $25 million a year, and most of that from stock comp. So headwinds, 2025. So what I'm going to end the video off on is talking about the growth expectations over here. So I've updated this. I got NVIDIA's as of Friday close price and their expected forward EPS, given their PE ratio, which is kind of not as high as I expected because of that massive increase in EPS. Though their PEG ratio looks very, very favorable, what I've done here is I've made up some considerations where I looked at, this was looking kind of weird and odd to me. So I looked at NASDAQ and saw that they also did a price to earnings growth expectation. They got 2.44. And what they talked about, what they considered is that growth does expect to slow, and they're saying as low as 6.4%. That's what their growth rate this 35% could drop down to. And considering something like that, maybe that's how they're getting their 2.4%. We just do that, pardon me. The PEG ratio becomes much more odd. So the growth is expected to slow. And the company is trading very expensive right now, but not for a while. So these are my thoughts on NVIDIA. Until 2025, I don't see any big things. After 2025, I see some declines potentially. But let me know what you think. This took a lot of time, so please, I am sorry. Pardon me if this was a long video, but my notes were many pages long. And I'm also working on videos on a company called SMCI and CRISPR coming up soon. So keep tuned for what's going to happen with that. We got some fun things planned. Thank you for joining me for this journey. Have a wonderful day, and think about NVIDIA and what they're doing with their models, especially BioNemo. Thank you kindly. Stay based, do it up, and see you next time.